All right, inshallah, let's start. Assalamu alaikum wa rahmatullahi wa barakatuhu to everyone who has joined in. Yes, it has been a long time that we have conducted a webinar in the past, but inshallah, as we are making more and more improvements to the app, we will continue doing this more and more often. One of the key things that we thought of restarting this journey was to come and address the most important topic that has been going on for the past 3-4 months on the app is the changes to the screening criteria. So there has been a Sharia board meeting which was conducted, and it was in the works for quite a few months before the Sharia board made a decision to change the screening criteria. So here we are going to take you through what has been the changes to the screening criteria and what has been the possible reasons for the changes in criteria. And as we move along, inshallah, at the end of this, there will be a Q&A session. The way we conduct the Q&A session is that you will have to write your questions on the chat box, which is there on your screen right now. On the right-hand side, you can click on the chat box and write your questions. Inshallah, we'll take all the questions before we end the webinar today. Keeping in mind that we just have an hour today to finish this, because I believe a lot of the people who are joining in are from the subcontinent and across the world as well, alhamdulillah. People from India and Australia will be in a slight hurry to possibly finish the webinar in probably an hour, because then we can enjoy the World Cup cricket match, inshallah. So we will make it quick, but we will ensure we cover all the topics, the agenda for today, and we aim to finish it, inshallah, in the next 1 hour. So about 30 minutes I'll take to finish my presentation and give you the briefing about the changes in these screening criteria. And the next 30 minutes, we'll keep it open for the questions that you may have. So your questions may be related to what we are discussing in the webinar today. Your questions could be anything related to the app. Your questions could be anything related to Sharia compliance of equity stocks as well. So just shoot your questions, and inshallah, we will answer those questions as well. Let's get started. Before that, there has been 2 changes in the screening criteria. And why is there a change to the screening criteria? The reason for a change in screening criteria is because Islamicly, along with its reputed Sharia board, constantly reviews the Sharia criteria to ensure that it is in line with the most evolving Sharia thought. What we mean over here is our Sharia board meets regularly. They bring in their vast amount of experience that they have while gaining that experience with sitting across various Islamic banks, Islamic asset managers, Islamic index providers, as well as other governing bodies. So they bring in their experience and expertise and get in a discussion with the research team at Islamicly. And then if there is a scope for improvement in the criteria, we make an improvement in the criteria, basis the data that we present to the Sharia board, and then the Sharia board makes a decision. Hence, after all of this research and development work, which has gone into all the experience of the Sharia scholars, they have come up and suggested that we change the Sharia screening criteria, and hence 2 changes have been created. So what are those 2 changes? As we all know, screening criteria comprises of 2 parts. The first part is the sector screening criteria, and the second part is the financial ratio screening criteria. So changes have been made to both, although some are minor, some are major. Changes in the business sector threshold of non-permissible income, and there has been a change in the applicable financial ratios. So what is the change in the business sector of the screening criteria that is applicable to identify whether a stock is Sharia compliant or not? So the change in the business sector threshold of non-permissible income is there has been a change in the way the tolerance to the impure income is considered. So what is the change? I'll read it out for you, and then I'll explain to you what the previous one was and what is the reason for the change. And I will also talk about what is the impact of the change. So let's start with the changes in the business sector screening criteria, which is in terms of the tolerance to impure incomes. So if a company derives less than 5% of its total business incomes from such non-permissible sectors, it may be tolerated and the company will still be deemed to have passed the business sector based screening. If you look closely at this, the tolerance to impure income is still at 5%. So what would be that change? So let me just bring up what the previous text was, and I have highlighted in red what has been the change. So previously, if a company derives less than 5% of its total business incomes, excluding non-operating interest income. So here the change has been that previously non-operating interest income was not considered part of the 5% business sector screening threshold. It was considered for the purification purposes because it is impure income, but for ascertaining whether a company classifies or passes the business sector screening, there was a threshold of 5% to impure incomes. Now, impure income will comprise of business-related impure incomes. Let's say, for example, sales of alcohol, sales of pornographic material, sales of adult entertainment, sales of an interest-based financial service, sales of cannabis, recreational cannabis, and the list is available with you. But non-operating interest income was not considered part of the 5% screening threshold, which has now been removed. Now, just to understand a little bit more and to give you more color, what was this non-permissible interest, non-operating interest income, which was not considered part of the business sector screening threshold previously? This non-operating interest income means if a company has deposited its cash into a bank account or into a financial instrument, which used to give it interest. Now, this activity of the company was not part of its core business activity. What I mean to say over here is this activity is not actively derived from an action of the management of the company. What this again means is that if let me take an example and explain it to you. If a company is a bank, that means a bank's core business activity is to lend money for interest basis and earn money from that lending activity. That earning would be classified as interest. Now here, since the activity of earning interest is an operating activity or a core business activity, such interest incomes would anyway be considered for the 5% threshold. But if the company derives interest income from a non-operating activity, which could be just like depositing cash into a bank account or investing your company's surplus cash into such instruments which may yield interest, such activity was classified as non-operating activity of the company. And since the interest income has been derived from such a non-operating activity, it was not considered part of the 5% threshold while ascertaining whether a company passes the business sector screening. This has been removed now. That means all kinds of interest income. Hence, if you see in the new criteria text, it does not bifurcate impure incomes into operating and non-operating. So if a company has derived interest income or any non-permissible income from any area, whether it be from an operating activity or from a non-operating activity, all of these interest incomes and all of these impure incomes should be less than 5% of the total revenue of the company, and hence that company will then pass the business sector screening. So this has been a change. So essentially, this has become a more restrictive change. So the tolerance to impure incomes has decreased. That means the tolerance to non-operating interest income has been removed, and it has been incorporated within the 5% threshold that the Sharia board had previously also allowed. So this is a more restrictive change, and hence about 600 plus companies in the world have turned non-compliant because of this change. So just to summarize this change, there has been a change in the business sector screening of the company. Previously, non-operating interest income was not part of the 5% threshold while ascertaining whether a company passes the business sector screening. Currently, with the change in the screening criteria, all non-permissible incomes, whether they are from an operating source or from a non-operating source, whether they're interest income or other non-permissible incomes, all of it has to be less than 5% of the total incomes of the company. So this is a more restrictive change which has come about in the screening criteria. And because it is a more restrictive change, 600 companies in the world have become non-compliant. Now, what is the reason for this change? The reason for this change is, one is AAOIFI standard, and two is enhancing the non-tolerance to all kinds of interest incomes. So AOIFI already had a restriction of 5% to all non-permissible incomes, and they did not bifurcate between operating and non-operating interest incomes. Further, there has been evolving thought across various Sharia boards of leading Islamic banks which have a similar approach. Hence, to align ourselves with the AOIFI criteria, the Sharia board made a change saying that all non-permissible incomes, whether they are operating or non-operating, will now be part of the 5% threshold, and hence the tolerance to impure incomes has reduced. This is the reason more number of companies have become non-compliant due to this change. And this change brings us in absolute convergence with the AOIFI criteria, which is 5% tolerance to all impure incomes. The second was, as Sharia screening is evolving, as this has been going on for about a good part of the past 4 to 5 decades, alhamdulillah, the Sharia board now feels that the relaxations given should now not be given. The relaxations need to be tightened a little bit, and hence the Sharia board came up with this directive for us, saying that all non-permissible income, whether operating or non-operating, will now be part of the 5% threshold. No further relaxation needs to be given. Hence, this has resulted in more number of companies becoming non-compliant. So this has been the change on the business sector screening. Let's look at the financial ratio screening, which has also changed. Here, a major change has taken place, which is, as you would previously know, there were 3 financial ratios over which the company had to be assessed in order to ascertain whether that company passes the financial ratio screening. The first one was the debt ratio, the second was the cash ratio, and the third was the receivables ratio. Colloquially, cash ratio and the receivables ratio combined are called as cash ratios. Hence, I have written in my slide that the change has been that the cash ratios have been removed. What were those 2 cash ratios? The accounts receivables ratio as well as the cash ratio has been removed. So what was the previously applicable financial ratios? So the cash compliance ratio was previously applicable. What was that cash compliance ratio? The cash compliance ratio was all cash plus interest-bearing securities. So if a company had cash or cash equivalents, and if it had interest-bearing securities would mean cash investments made into certain instruments, money management instruments, which are giving out a return, which can be classified as interest. So if a company has either cash or cash at bank or an interest-bearing security, the total value of that entire proportion should be less than 36 months market cap of the company. Should be less than 33% of the 36 months market average of the company. So cash and interest-bearing securities divided by market value of equity. The market value of equity was derived by taking a 36 months average. This ratio should be less than 33%. This ratio, which is called the cash compliance ratio, was previously applicable. This has now been removed. So this ratio is no longer applicable. While we ascertain companies whether they are Sharia compliant or not, cash compliance ratio is not applied anymore. Similarly, accounts receivables ratio. So accounts receivables ratio was accounts receivables divided by market cap of the company, or in other words, market value of equity. Again, here the market value of equity is considered as a 36 months average, should be less than 49%. This ratio has also been removed. That means accounts receivables ratio will no longer be applicable while ascertaining if a company passes the financial ratio screening. So the change is a more liberal change. So 2 restrictions which were applied, which was cash over its market cap to be less than 33%, as well as accounts receivables to its market cap to be less than 49%. These 2 thresholds or these 2 financial ratios have been removed now. That means if a company has to be classified as Sharia compliant, there is no longer a need to apply the cash compliance ratio or the accounts receivables ratio. Since this is a more liberal change, more number of companies have turned compliant. So in our analysis, about 1,300 plus companies in the world have now turned compliant. Why did these companies turn compliant? The reason has been very simple, that the applicable thresholds have been removed. Not all financial ratios have been removed, just the cash ratio and the accounts receivables ratio have been removed. So out of 3, 2 have been removed, and hence there's more likely that companies will now turn compliant, and hence 1,300 plus companies in the world have now become compliant. Again, why has this change been put in place? Similarly, as you can see, with the introduction of standard 59 in AAOIFI Sharia standards, it has implied that cash ratio is no longer applicable. And hence, our Sharia board has also removed the application of all cash ratios, which is the cash to market cap as well as accounts receivables to market cap. This has been removed in line with what AAOIFI is also keeping in practice. So if you have a joint reading of AAOIFI standard 21 and AAOIFI standard 59, you will now understand that the cash ratios are no longer applicable for Sharia screening. And hence the Sharia board has taken cognizance of that, as well as made the change into the Islamicly screening criteria. So now we are completely again in line with the AAOIFI screening standards. The second important thing why this has been affected is previously when the cash ratios were put in practice, the concern of the Sharia boards has been that a company, which is a joint stock company listed on a stock exchange, should not derive more than 1/3 of its value. That is, 1/3 of its value should not be coming in from pure cash. That means if a company derives more than 1/3 of its value by virtue of its cash balances on its balance sheet, the previous thought of the Sharia scholars was that this would classify that joint stock company to be akin to a cash pot. A cash pot can only be traded at par. So the rules in Arabic, if I have to classify that, when you trade a pot of cash or when you trade in currencies, the rules of sarf, which essentially means the rules of exchange of currency, will get applicable. Now, the rules of currency exchange, in very simple, straightforward terms, would entail that the trading of cash needs to be done at par. Whereas in joint stock companies, trading of stocks is not done at par. It is done at its market value, which the common investors or in that company believe to be the value. And hence, to restrict and to allow trading in, to restrict cash and to allow trading in joint stock companies at values which are equivalent to market values, the Sharia board had put a restriction that such corporations should have a cash equivalent balance to be less than 1/3 of its market value. But given the current situation, not many companies, I mean, hardly any companies in the world would keep cash as such. They would either invest it in a bank deposit or invest into money market instruments. These are not cash. So the form of cash changes into a debt instrument or an asset instrument. And hence, there was no practical implementation or practical applicability of cash ratios in modern joint stock companies. And hence, the Sharia board came up as well as caught up with the current trends of joint stock companies and removed the application of cash ratios. The other thing which boosted the argument for removing the cash ratios was that that company is a going concern. What this means is the company will perpetually exist and the company's financial auditors give a certificate to that effect that the company has sufficient cash balances, the company has sufficient resources to be a going concern. That means it will perpetually continue at least till the next financial year. In reasonable assessment, it doesn't give a guarantee that the company will be in existence, but it gives a reasonable assessment that the company is a going concern, and hence there is no such liquidity crunch in the company to not be in continuance for at least the next one financial year. So given the argument that it is a going concern, given the argument that the cash balances of a companies are not maintained in pure cash form, as well as to align ourselves with the AAOIFI standards, their ratios of cash and accounts receivables have been removed. So what is currently applicable? The debt ratio is currently applicable. So what is a debt ratio? Let's revise that. So total debt of the company, whether it is interest bearing, total interest bearing debt should be less than 33% of the market cap of the company. Here again, the market cap is ascertained on a 36 months average basis. In this calculation, if there is a non-interest bearing debt or there's an Islamic debt, that is excluded or not considered. So only interest bearing debt of a company to its 36 months average market cap should be less than 33%. This is the only financial ratio which is now applicable while screening for stocks over its financial ratios. So two changes have been made. The first on the business sector screening. The business sector screening has become more stringent, wherein tolerance to non-permissible income, which is in the nature of non-operating interest income, is also now included in the 5% threshold. On the other hand, in the financial ratios, the change has been more liberal in terms of there is no application of cash ratio screening anymore, and there is no application of accounts receivable screening anymore. So there has been a liberal change in the financial ratio screening, whereas a more stringent change in the business sector screening of the company. Everything else remains the same. The computation of purification remains the same. The rules of equity trading remains the same. Everything else remains the same. The sector exclusions or the non-permissible areas or non-permissible activities of a company remains the same. There is no change on that side. Purification computation is also the same. The way we compute purification is previously as well as currently. All non-permissible incomes, whether operating or non-operating, or irrespective of its source, nature, or duration, it is considered to be non-permissible, and hence it was taken in the purification ratio, in the dividend purification ratio that is available on the app for every stock. So that remains the same. The changes has only been in the calculation of the 5% threshold, as well as in the removal of financial ratios, which is the removal of cash and debt ratios. The removal of cash and accounts receivable ratios, the debt ratios are still applicable, and the thresholds remains the same. There is absolutely no change on that side. I think I've gone a slightly fast in terms of explaining this, given that we have a time-bound thing today. I'll be happy to take questions from here onwards. Let me stop the screen share. Okay, if you have questions, please put the questions in the chat box, and I will be happy to answer them starting now. Once we finish all the questions, we will wrap up the webinar. Yes, it is a short one today, but we've got to keep it that way. So I'll just go through the starting questions. I don't see many questions coming up. There is one question which has come in from a user, which says that manually adding the holding option has been removed from the app. When are you going to add this option? This option is not going to come back, primarily because we now have the option that you can link your broker account with the Islamicly account at no cost. So if you are having a trading account, let's say with any of the 32 brokers that we have integrated, you do not need to add your holdings manually. Just come to the app and link your existing broker with the Islamicly app. All the security features are already available. It's always consent based. We have absolutely no rights to make any changes to your brokering app, to your broker app. We have absolutely no access to your cash holdings. We just will get access to your existing holdings, and the app will automatically calculate whether a holding is in compliance, whether a holding needs to be purified, and whether it has changed compliance, and it will notify you. So manually adding holdings was a very laborious task. We have completely automated this activity by virtue of letting you link your existing brokers with the Islamicly app. And once you link your Islamicly app with your existing broker, the Islamicly app automatically syncs all your holdings. It computes your purification. It monitors your compliance status, and it alerts you whether a holding that you have is still in compliance or it has been changed. Now, this is for your starting position. if you make new trades after you have linked your account, those trades will also be automatically monitored, but those trades will have to be executed using the Islamicly app itself. So if you go to any stock and you see that it is Sharia compliant, you can now see a buy now button over there. You click on that buy now button, it will ask you to it will go through the security concerns or the security flow of your existing broker. Once you give your OTP or put in your password, that completely is in the environment of the broker and we have no access to that. Your app gets linked, your broker app gets linked to the Islamicly app, and that's it. As simple and straightforward as that. If you're intending to buy or sell a stock on the Islamicly app, if you have already linked your broker, there is no extra charge that Islamicly adds to that trade. All your charges are taken care of by your broker, and there is zero additional charge on that side. So trading and monitoring your portfolio using Islamicly app has become very simple and straightforward now. It has become completely automated, and hence we felt that there is no need to add the holdings manually, and hence we've removed it. Further, it would add confusion if you synced your account or you linked your account with your Islamicly account with your broker account, and you add your stocks manually to your holdings. It will create confusion. It will either overstate your holdings value or understate your holdings value, and hence we have removed that option. Someone is asking me, please explain intraday buying and selling. There are at least 100 questions on the Islamicly app in the discussion forum, which talks about that. About whether intraday trading is permissible or not. The Sharia board of Islamicly is absolutely clear that there is no doubt that intraday trading is permissible. I'll repeat myself, intraday trading is permissible, but you will have to abide by a few regulations over here, which are governed by Sharia. The first point over here is that you need to buy first, sell later. The second point is you need to buy Sharia compliant stocks, and that stock should be compliant at the time of entry as well as at the time of exit. The third point over here is that when you do intraday trading, you should select such a transaction or such a transaction mode with your broker, which gives you the ownership and not the broker. What I mean to say over here is that the option to buy and the option to sell should be exclusively with you. Your broker should not be able to auto square off your trade at the end of the market hours. If your broker is able to square off your trade automatically at the end of market day or the market trading hours, that means that you never had ownership of that stock. And if you do not have ownership of that stock, you cannot profit of that. You cannot trade and profit out of that. Hence, if you're using leverage or certain options, let's say, for example, in popular brokers out here in India, you have an option of trading in MIS section and the CI and the CNC section. MIS section is used for intraday trading, wherein you do not get ownership of the stock that you traded in intraday, and hence, if you trade in the MIS section or in a transaction where your broker has the full right to square off your trade, that trade will not be compliant. But if you trade in the cash segment, you can do intraday trading. The rationale is very simple. A lot of people ask that there are videos on the internet with other scholars. There are clear diktats by certain muftis saying that you cannot do intraday trading, for the primary reason that if you trade on, let's say, Monday, you get the stock in your demat account or your digital account probably on Tuesday or Wednesday. In certain markets it's T, in certain markets it's T+1, in certain markets it's T+2. Please note that this is just a delivery confirmation of your already executed trade. When you execute the trade, all the liabilities as well as all the profits as well as all the responsibility of owning that stock transfers onto you. It transfers on to the investor the second the trade is executed, and you get a trade confirmation from your broker. That means if the price goes up, you will profit. If the price goes down, you will make a loss. You cannot return that stock if you and say that I do not own this stock because I do not have delivery of that stock in my digital wallet or my digital depository, or commonly called as Demat account out here in India. It is just a delivery mechanism, a reconciliation and delivery mechanism, which happens in T+1 or T+2. It depends on the process of the exchange or the process of the regulator which has been put in place. As we go along and as digitization catches up to most exchanges in the world, this T+2 settlement will probably come to T+1 and probably come to T as well. In certain markets, you already have a T basis settlement of all trades executed on the same day. So do not confuse yourselves with delivery of that stock and ownership of that stock. Ownership of that stock comes to you immediately as soon as your cash balance gets deducted from your trading account and you get a confirmation that your trade has been executed. That means you are now the absolute owner of that stock. Now, since you are the absolute owner of that stock and you have a confirmation from the exchange as well as your broker that the stock is now in your ownership, you can go ahead and sell that stock anytime that you may so wish to. That means if you bought the stock at 10.01, you can sell it at 10.02 or 10.01.01 as well, because you are the absolute owner of that stock. So intraday trading is permissible, but the stock should be in your ownership. It should not be in the ownership of your broker. So please be careful when you do intraday trading. Generally, also, you should be careful in terms of doing intraday trading. We are not financial advisors over here, but I don't think anybody has made great amount of funds or created wealth out of doing intraday trading. Wealth is always created. I mean, let me not use the word always, is most likely to be created in long-term strategies that people have to invest in. In terms of the sunnah of the Prophet as well, invest or do such businesses where the likelihood of profit is good or is higher, but the risks are lower and the profit is also lower. It is preferable to do such businesses or to enter into such transactions where there is a reasonable surety of a profit, the risks are low or manageable, and there is, because of this equation, automatically the return will also be low. Or reasonable, I would say. I wouldn't classify it as low, I would classify it as reasonable. So do not undertake highly risky transactions where the likelihood of profit is there, but the likelihood of loss is also there, and the likelihood of a sure shot profit or a reasonable assurance in profit is low. Hence, intraday is not a very encouraged form of doing or dabbling in Sharia compliant stocks. That is our 2 cents on that. Okay, the next question is also about intraday trading. I have absolutely no reason as to why people keep on harping about intraday trading. Intraday trading, although is Sharia compliant, it is definitely not recommended for retail investors. Definitely not recommended for retail investors. I don't think in the history of exchanges, in the history of stock trading, any trader has made big money or has created wealth or has created meaningful wealth by doing intraday trading. Meaningful wealth and long-term wealth and sustainable wealth is created by putting your funds into stocks in the long term or the medium term with the goal-based investing. That always has given results in the long run. Short-term profits definitely people make on intraday trading, but if you go and understand the maqasid of Sharia as well, I don't think, although it is permissible to do intraday trading, but it is not in the spirit of Sharia. That is what I would say. Somebody's asking, what are the companies available in India for Sharia compliant trading? All companies which are Sharia compliant and available for trading are available on the Islamicly app. You can go and click on the universe section and you will get the complete list, which is updated on a daily basis. Even today, after 3.5 years of being in the market, we are probably the only screening app which is updating its data on a daily basis so that you get the most up-to-date information on Sharia compliance. If I have to answer that question in Hindi, Mr. Sheikh has asked the question, इंडिया में कौन सी कंपनीज है ट्रेडिंग के लिए जो शरिया कंप्लायंट है? इंडिया में जो भी कंपनी शरिया कंप्लायंट है which are available for trading, जिसमें आप ट्रेड कर सकते हैं, ये कंपनीज इस्लामिकली ऐप पर दी गई हैं. ये कंपनीज को आप देख सकते हैं इस्लामिकली ऐप के ऊपर. Yes, subscription is required to look at the screening results, but it's hardly anything in terms of the cost that we are charging for subscription. The information available on the app is absolutely 100% fresh, which is, it gets updated 5 days a week. Saturday, Sunday, there is no market data, and hence it doesn't get updated for Saturday and Sunday. Tosif is asking whether a coupon or a discount for subscription is still available. Tosif, you may get in touch with our customer support, and if they have any ongoing offers, they will be able to pass it on to you. How do we get in touch with our customer support? If you fire up the app, you can see the WhatsApp icon over there on the homepage itself. Just click on the WhatsApp icon and you will instantly get connected to our 24/7 WhatsApp support. And if they have any coupons available, they will be able to pass it on to you. Please remember, Islamicly is giving a very high quality institutional grade screening service to retail users at, if I have to classify it, at probably 1/100th the cost of what we would give it to institutional investors. It is a gift from the Islamicly team that we are giving it away at such a reasonable price and with such high quality of Sharia scholars behind it, such high quality research behind it, and the legacy of 20+ years of screening behind it. So in terms of the cost of subscription, we believe it is reasonable, but if you still are not able to get to that bar, please get in touch with our customer support team, and they should be, if they have any running offers, they'll be happy to help you with that. Somebody is asking a question. My compliance share has turned non-compliant due to stock price reduction. Can I hold on to it until it becomes compliant again? The regulation from a Sharia perspective of a stock turning non-compliant is very simple and straightforward. There are articles available on the app as well, on our website as well, and there are tens of questions answering this the same issue on the Islamicly app. As you can see, Islamicly app is a very educational app as well. It has got lots and lots of educational content available. You don't really need to come to our webinars to get your queries answered. You can go to the app and you can see all sorts of questions being asked and all sorts of questions being put out in an article format, in a very concise article format, so that it becomes a quick reading. Again, this article is also referenced is on a daily basis. You get changes in compliance notification on your app, I think around midday. If you click on that, it will take you to the page of stocks which have changed compliance. If you scroll down, there is a bar which talks about what to do if your stock has changed compliance. Click on that and you can see in detail as to what you need to do if your stock has changed compliance. Now, to answer your question, if a stock has changed compliance, you have 90 days to exit that stock. Any gain that you make or any dividend that you receive within this 90 days after the stock has changed compliance will be considered as permissible income. The dividends will still be subject to purification because they include a part of impure incomes. But the capital gains that you make within this 90-day period and the capital gain that you made in the compliant period will be considered as permissible income. If you continue to hold a stock beyond the 90 days, any gain or any dividend that you receive on the stock beyond the 90-day period will be considered as non-permissible income. So you need to mandatorily exit the stock when the 90-day period ends. Now comes a question that you have invested, let's say $100 into a stock. This stock was compliant when you invested $100 in the stock. Now the stock has turned non-compliant, and the stock has turned non-compliant because of reduction in its price. Let's say the stock price is now $80, and because the market cap has reduced, the ratios, the proportion of probably debt has increased, and hence it has breached the 33% ratio, and the stock is now non-compliant. Now, if a stock becomes non-compliant, due and you are under a financial loss. That means the current price is less than your investment price and 90 days has already passed. You need to mandatorily exit that stock. But the scholars also allow you to hold that stock till you recover your investment price. Although it is not a recommended practice. I'll repeat myself. If you are having a stock which was compliant when you invested in, now the stock has become non-compliant. The 90 days grace period has also expired and your investment is in a loss. That means your current market value of your stock is less than your investment price. The scholars do allow you to hold that stock till you recover your investment price. But this route or this option is not recommended. What is recommended is, what is ahsan, what is good, what is tayyib, is that you exit the stock, book the loss, and close that position at the expiry of the 90-day grace period. I hope I've made it concise for you to understand this. Someone is asking, short selling nahi kar sakte intraday trading mein? Definitely no. Short selling is not permissible. आप short selling नहीं कर सकते. Short selling में शरिया की कोई इजाजत नहीं है. You cannot do short trading because Sharia does not permit it. The reason is very simple. What is short trading? Short trading is you are borrowing something from your broker and you are selling it. And you're telling your broker that before the market closes today or before the time limit to return that stock, you will be able to buy that stock and give it back to him. The differential is what you profit out of. Essentially, there are two major concerns in this from a Sharia perspective. You are profiting out of a transaction which you did not own to start with. The stock that you sold was borrowed from the broker. A thing that you do not own, you cannot profit out of it, is the regulation of Sharia. So here you made a profit out of something that you did not own. Secondly, did you have the full consent of the broker when you are trying to sell his stock? Yes, you do have the consent from the broker that you can probably sell this stock, but that is not clearly mentioned in the terms and conditions of your broker. The broker only says that I am lending you this stock and I want it back before the time limit expires. The time limit usually expires before the end of trading day of the same day on which you borrowed the stock from your broker and sold it. And you will have to buy it back from the market and make good the borrowing that you did. So anything that you do not own, you cannot profit out of it, and hence intraday on the short selling side is not permissible. If I have to repeat myself in Hindi or Urdu, जो चीज आपकी खरीदी नहीं गई है, जो चीज आपने उधार ली है ब्रोकर से, उस चीज पर आप प्रॉफिट नहीं बना सकते. आपको अगर कोई चीज पे प्रॉफिट बनाना है तो वो चीज आपकी ओनरशिप में होनी चाहिए. I repeat myself, it should be in your ownership. It does not necessarily mean it should be in your possession. Possession means physically उस चीज को अपने कब्जे में रखना. It doesn't necessarily means you need to have possession, but you can have constructive possession. In terms of stocks, you always have constructive possession before it gets credited to your digital wallet or demat account as it is called here. But you have clear ownership of that stock. And hence you should buy first and sell later. You cannot sell first and buy later. Sharia doesn't permit that. Somebody is asking, are these changes applicable immediately on your platform? These changes are in effect on the platform for quite a long time now. In terms of, if I have to give you a timeline, I believe these changes have come into play somewhere in July and August. So these changes are already applicable on the screening criteria and the screening results on the app. So whatever changes we have discussed today, they are already implemented, and the results of screening which are available on the app are after these changes have been implemented. Someone is asking how to start trading. How to start trading is you need to come to the Islamicly app, look at the brokers which are available in the Islamicly app. There are 32 plus global brokers available, brokers from India, brokers from the US, brokers from Canada, brokers from the UK are available on the app. Look at the brokers available on the app. Go to that broker platform, open an account with that broker, and come to the Islamicly app and link that account to Islamicly app. Look at the stocks that you want to invest in, which are Sharia compliant. Click on the buy button and the trade will get executed. As simple as that. Now, what stocks to trade in? We are not investment advisors. We are not licensed to give out that information. Hence, we cannot tell you which stocks to invest in. There's another question on intraday. I'll skip that because I have answered that in detail. Somebody's asking me a question. Is there any way we can request a feature where we can get a list of companies which are 100% Sharia compliant, basically which has no interest bearing debt, no income from non-permissible sectors, etc. This feature is already available on the Islamicly app. So if you go to the universe section of your app and go to the burger menu, the inverted funnel menu on the top right, click on that. It will give you a certain list of filters that you can apply. Over there, you can click on the checkbox of 100% compliance and it will return to you the list of stocks which are pure. Pure are exactly as what you are describing. There is zero interest income on the company. There is zero interest payment by the company. And there is absolutely no purification applicable on that stock because there is no impure income in that company. Those stocks are called 100% Sharia compliant stocks or pure stocks. You can get that list on the Islamicly app as well. Mind you, this list will not return any result in many markets. Let's say, for example, in the India market, it will not return any result. In the US market, it will not return any result. In the UK market, it will not give any result. In China, it will not give any result. These companies are essentially concentrated in the Middle East and Far East. In the Middle East, again, further concentrated in the GCC, wherein the Saudi stock market has a couple of companies which are 100% Sharia compliant. Kuwait, UAE, Oman, Bahrain, Qatar will have certain companies which are 100% Sharia compliant. You will have companies in Egypt which will be 100% Sharia compliant. Islamic banks, Islamic insurance companies will also be classified as 100% Sharia compliant companies. You will also find such companies in the Far East, which is Malaysia and in Indonesia. Again, there as well, Islamic banks and Islamic insurance companies and Islamic finance companies, which are having a Sharia board and which have a due certification process in place, will be classified as 100% Sharia compliant. So this option is already available on the app to ascertain which stocks are 100% Sharia compliant. But it may not give results because there is no such a company in India which is 100% Sharia compliant. I believe there is no such company in the US, UK, Canada, which is 100% Sharia compliant as well. So these companies this filter will give a result only if your market is selected as either Malaysia or Egypt or GCC. It is many of the companies are concentrated in these markets. Somebody's asking ownership कैसे पता कर सकते हैं? So somebody's asking, how do I ascertain whether the stock is in my ownership? When you execute a trade with your broker, the broker sends you a confirmation instantly, or the position comes and sits in your holdings tab in your broker app. That means you have ownership of that stock. Simple and straightforward as that. Your money has got deducted, and that stock is now available in the executed trades or in your holdings of your app, of your broker app. That means you are the owner of that stock. If I have to say the same thing in Urdu or Hindi, जैसे ही आप कोई भी स्टॉक का ट्रेड एग्जीक्यूट करते हैं, आपके अपने ब्रोकर ऐप के ऊपर आपके अकाउंट से पैसा डिडक्ट हो जाता है और आपको एक ट्रेडिंग कॉन्फर्मेशन आता है कि आपका ट्रेड एग्जीक्यूट हो गया है. अब हर ब्रोकर का अलग अलग सिस्टम होता है. सम ब्रोकर्स गिव यू एन ईमेल. कोई ब्रोकर्स आपको ऐप पे नोटिफिकेशन दे देते हैं कि आपका ट्रेड एग्जीक्यूट हो गया है. कुछ ब्रोकर्स आपकी पोजीशन को आपके होल्डिंग्स में दिखाते हैं. कुछ brokers आपकी executed trades को executed trades tab में दिखाते हैं. Any of these situations, it means आपका trade execute हो चुका है. That means you are now the owner of that stock. Okay, people are asking me about Islamic coin. Islamic coin is a crypto. As of now, we are not giving out any information about cryptos because there is no clear guidance whether a crypto is considered Sharia compliant by our Sharia board as of now. And hence, we are sticking ourselves to stocks and ETFs. We are not giving out any disclosure or giving out any screening advice on cryptos or anything which is related to cryptos as of now. Okay, very good question. Somebody's asking, Amazon is showing as Sharia compliant, but its AWB provides service to Israelis. So how is it compliant? Okay, very good question. In the current context, a lot of people have asked us this question over emails as well as through the discussion forums. Is it permissible to invest in companies in Israel? That is question number one. Two is, how do we ascertain compliance of a company if that company derives revenue by selling its products to Israelis or in the country of Israel? There is absolutely no Sharia basis. Hear me out. There is absolutely no Sharia basis to not trade or to not invest in companies which are owned by Israelis. There is absolutely no Sharia basis for that. But there is a preference that consumers can or investors can exercise on it. The preference could be that you can voluntarily not trade in companies which are Israeli based, or you may not invest in companies which are earning revenues from the country of Israel. But the Sharia board has a different view over here. The Sharia board has a different view. Now, why this view has come in, I'll talk about that first, and then I'll talk about what the Sharia board's view is. The Sharia board says, and even the basis of why this question is being asked, this question is being asked is because we do not want to have any financial relationship, or we do not want to give revenue, or we do not want to be part of an ecosystem of any company which is or has a connection with Israel because of the ongoing atrocities, because of the ongoing situation, or because of the hostilities conducted by that country. Why is that country conducting that hostility? Why is that country being supported by corporations? Why do we think that we should not be investing in companies which have an Israeli origin? Because they support the atrocities, because they probably or possibly are funding the atrocities, possibly are funding the aggression against the Muslim world. That is the primary reason why we are saying that we should boycott Israeli products, boycott Israeli companies, boycott Israeli stocks. True. The inverse of it is what our Sharia board says. Our Sharia board says that why don't we allow investments in Israeli companies so that Muslims can invest and become shareholders and possibly become a voice in Israeli companies. And all of these companies are governed by bylaws. They have voting rights. If you are a significant shareholder of, let's say, an Israeli company, and if that Israeli company has a policy which is adverse or is against Sharia, you being a significant shareholder, or you as a group being a significant shareholder, can enforce or veto or stop that process by sitting outside and not participating in the ecosystem and telling them not to do A or B. Do you think they are going to listen? Obviously not. Whom are they going to listen? They are answerable to their boards. They are answerable to their shareholders. So if a company is into a permissible activity, if a company is classified as Sharia compliant, you can invest in that and create a significant shareholding for yourselves, and then prevail yourselves in the boards of that company and ensure constructive, effective action. Sitting outside these companies is not going to lead you to any effective or efficient action. That is the logic why the Sharia board has allowed investments in Israeli companies and also allows investments in companies which derive revenue from sales to Israelis or to the Israeli population. Let me also give you more color on this. Let's say the question has been asked on Amazon. Amazon is a global conglomerate. It operates in probably 50 plus countries, and I don't know the exact number, but reasonably I would say that it will be operating in 50 plus countries in the world. The population of Israel is less than 10 billion. The population of the world is about 8 billion. Let's say they serve India, they serve Pakistan, they serve the Middle East, they serve Indonesia. These are the countries which have the highest global populations in any country. So if I have to make an assessment, the revenue of, let's say, an Amazon coming in from less than 10 million population compared to probably 4 to 5 billion people that they serve globally will be less than 5% again. So it will come within the tolerance threshold as well. Although there is no color available, there is no information available as to what is the revenue that they get from this geography. Hence, we will not be able to make an assessment, and we will not be wanting to make an assessment on that side as well, because it doesn't fulfill any Sharia condition. So that answers, I believe that should holistically answer your question. Somebody is asking, does Islamicly cover ETFs in the UK market? A lot of ETFs in the US market have already been covered. There are hardly any ETFs in the UK market which will be Sharia compliant. I will make a note of this and look into as to how many ETFs are covered in the UK market, but we do cover ETFs as well. Now, the way we cover ETFs, that there is a differentiation over here. Let me just put a word of caution over here. We will be finishing this webinar in the next 15-20 minutes. We are already hitting the 1 hour mark, but there are quite a few questions, and I will be going faster now in terms of answering the questions. If you have any questions, please put it now, because we will be wrapping this up in the next 15-20 minutes. Okay, regarding ETFs, an ETF is a structured product. It is not like a joint stock company wherein you can apply the screening thresholds and get the results. An ETF does not give adequate disclosures using which you can apply screening criteria on top of it and get the results as of now. And hence, the Sharia board has taken a decision that an ETF to be classified as Sharia compliant, it needs to be certified as Sharia compliant. You cannot take a conventional ETF and apply a screening criteria on top of it and then purify out of it. The purification computations which I have seen by other service providers on ETFs is in my experience, and it's my personal opinion, is at the very best, or at the very least, I would say, is flawed. It doesn't satisfy the paradigms upon which Sharia screening has been built. It doesn't satisfy the underlying rules of Sharia, if I have to translate that into, or the objectives of Sharia, and hence using an ETF screener which takes a conventional ETF, screens it for its revenue, screens it over its market cap, does not make sense. Does not make sense from a Sharia perspective. So an ETF to be classified as Sharia compliant, as far as our Sharia board is concerned, it needs to be certified as Sharia compliant. So yes, there are quite a few ETFs in the US, quite a few ETFs in US, in Canada, as well as a few in the UK, which are certified as Sharia compliant. You have ETFs in the GCC region as well, which are classified as Sharia compliant. Only those ETFs are available on the app which are classified as Sharia compliant and have a certification to its effect saying that they are run in a Sharia compliant manner. We do not conduct screening or do not apply screening on conventional ETFs and then say that, okay, fine, 70% of this ETF is Sharia compliant or 30% of this ETF is Sharia compliant. It makes no sense. Okay, moving on. Somebody is asking, any plans to add mutual fund purification calculations in the app, especially for Tata Ethical Fund and Taurus Ethical Fund? Okay, Again, like ETF, a mutual fund to be classified or to be permissible for investment by Sharia compliant investors, a mutual fund should be certified and audited as Sharia compliant. You cannot take a conventional mutual fund and apply screening on top of it and do purification on it and still be invested in that conventional mutual fund. Investments in conventional mutual funds is not permissible. Now, coming to which mutual funds can be invested in, a mutual fund which has a Sharia certificate to its effect as well as an audit certification to its effect can be considered as Sharia compliant and permissible for investment. I believe your question is relating to India market. In India market, you have Tata Ethical Mutual Fund as well as Taurus Ethical Fund. Now, Tata Ethical Mutual Fund is adequately Sharia certified and is adequately Sharia audited, and it also gives out the purging ratio, as they call it. So you have that purging ratio available on the Tata Ethical website. Very soon, we will also be incorporating this Tata Ethical Fund into our app, and the purification number will also be available on the Islamicly app. But that purification number will be the same as what has been disclosed by the owner of the product, which is Tata Ethical Fund, and they conduct a semi-annual audit and calculate the purging ratio. So the purging ratio of Tata Ethical Fund is available on the website of Tata Ethical Fund. Now coming to Taurus Ethical Fund. I'm not sure whether it's called Taurus Ethical Fund, but there is a fund by Taurus Asset Management which follows a Sharia index. But if you go ahead and read the prospectus of this fund, they clearly mention that they are not Sharia certified. So although they may be investing in stocks which are Sharia compliant, but is their practice of investment or the process of investment or the SOP of investment is in compliance with Sharia? We do not have confirmation on that because we did not find the Sharia certification of that fund and we did not find the Sharia audit of that fund. And hence, we do not consider that fund to be Sharia compliant. We consider Tata Ethical Fund to be adequately Sharia compliant because there is a reputed Sharia board available which has certified that product and they conduct regular audits of that product as well. Okay. The next question is, scholars like Sheikh Mufti Taqi Usmani Saab and TASIS considers illiquid assets to total assets ratio as an important ratio. I believe, yes, that is another way of looking at screening. What this or that ratio or that threshold is not considered necessary by our Sharia board as of now. Somebody is asking me that we should conduct a webinar in Hindi or Urdu for better understanding. There is an existing webinar on the platform, on the Islamicly YouTube channel, which is in Hindi and Urdu. But if you're asking me a question in Hindi and Urdu, I am hereby explaining that question in Hindi and Urdu as well. Is it possible to watch a replay of this webinar? All webinars, as usual, are available on our YouTube channel. Okay, somebody's asking me a question which is again answered probably tens of times on the app. Is Infosys provides most of the service to banking sector and most of its profits are from financial services? Kindly put light on it being Sharia compliant. So the question here is, a company like Infosys, which is a technology services service provider, it is one of the largest tech companies in India, provides services to the banking and financial services industry, and they get a significant revenue from the banking and financial services segment. Here, this question has been put to the Sharia board. The Sharia board is very clear on this. They have said it in absolutely unambiguous terms that the software being provided by software giants like Infosys or let's say Microsoft or any of these tech companies in the world, the software is a banking software. It is not an interest accounting software. Yes, the interest accounting is also part of that software, but it is not the only function of that software. A banking as a service is not fully non-compliant. Only the elements which or the transactions of a bank which deal in taking or paying of interest that segment is considered non-permissible. A bank facilitates various other transactions for its consumers, which may be considered as compliant. For example, a bank opens a current account of a customer, a bank opening a savings account of the customer. The process of opening also requires technology. Maintenance of accounts, giving out statements is another function of a bank. Giving out credit history or giving out bank guarantees, giving out letters of credit, helping in import and export payments, doing international payments connected to correspondent banking network. These are services which are generally considered Sharia compliant. So the software given by technology giants also covers these areas. It does cover the accounting of paying and receiving of interest, but it is not exclusively for paying and receiving of interest. So the Sharia board says the activity of providing a software service to a conventional interest-based bank will be considered Sharia compliant, because by virtue of providing this software to the conventional bank, you are not specifically aiding in the taking or paying of interest. What you are aiding is in the efficiency or the efficient functioning of the bank, and the software incorporates that. This is the argument number one. The argument number two is the same software can also be used by an Islamic bank. You have various Islamic banks which are also clients of Infosys, who have utilized of their services of the banking and financial services offering. And hence, since there is a clear compliant alternative usage, which is compliant in nature, the service as such is not generating interest. The service as such is not paying interest. It is an enabling service. It is an efficiency service, and technology in today's world is pervasive. It doesn't have caste, color, or creed or religion. It is a platform. And hence, a company which is providing the technology cannot be put at fault. The company using the technology can be put at fault. So the company using the technology for non-permissible use is the bank, and hence the bank is non-compliant. But the company providing that service of technology, which is Infosys in this case, will not be considered non-permissible. Now, here again, I have seen screeners which have classified these companies as non-permissible. And here comes the magic. The magic, we've always been saying, the magic in screening is in terms of understanding the sector compliance of the company, understanding the business activity of the company, and having the understanding of Sharia from the experience of working with the most experienced world-renowned Sharia scholars. Now, if you look at Infosys and apply an algorithm-based screening, it will return that the company derives about 29.3 or 29.6% revenue from BFSI segment, which is banking, financials. I think it's called banking and insurance segment. So it doesn't mean that the company Infosys is selling banking products, is selling insurance products. No, it is not. It is just providing technology. But the algorithm is not smart. It's a binary thing. It will just pick up the words banking and insurance. It will pick up that it is part of the revenue. And since it is 29 point something, it is more than 5%. Hence, it's a non-compliant. I mean, this is a very, 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 very rudimentary approach taken to screening. Screening has progressed 20 years, hence from there. I have written a paper about 10 to 12 years back, which talks about whether Sharia equity screening is a data approach or an information approach or a knowledge approach. The approach which is taken by screeners like what I have mentioned right now by classifying Infosys as non-compliant is the information approach. So they've taken the data, they've applied an algorithm on top of it. So there's additional information, and hence the screening result has come out. What we apply is we take this result and then we give it to an analyst who has interaction with the Sharia board, who has access to the Sharia board minutes, who can look at what the business of the company is, and that becomes a knowledge approach. So incorporating the human brain on the information and incorporating the Sharia knowledge leads us to a knowledge-based approach, which Islamically follows, and hence our screening is institutional grade in quality, and we don't make these kind of errors. Okay, why is dividend purification ratio showing the current value for older dates more than a year or 2 years instead of actual ratio for year? We can only have, so the question is that dividend purification ratio is only giving the purification ratio for the past 2 years, and why not for years before that? We can only keep as much data on the app. If we keep historical data on the app, it will become even more slow. And if you have not purified for more than 2 years, I would say it's already time barred. Islamicly app has been around for the past 3.5 years. This is available, but still, if you need any help on getting the dividend purification ratio of a stock which for a year, which is more than 24 months old, you can write to the customer support team and they will definitely be able to help you. It will take some time to get back to the research team. It will probably take a day for the customer support team to get back to the research team and get the information, but we will help you out. Okay, I'm coming to the Q&A section. Somebody's asking me, existing holdings are not updated automatically. If the existing holdings have been traded through the Islamicly app after you have connected the broker, or you have at the first time that you linked your account with the broker and all your holdings have been imported, in these two scenarios, holdings will automatically be updated. But if you trade outside the Islamicly app, that is, you trade on the broker directly, the broker does not pass the information back to the Islamicly app because of security concerns. Somebody's asking whether this change is applicable to all countries, whether Islamic countries or non-Islamic countries. This change is applicable across the board. The Sharia criteria is applicable to all the stocks of the world. This section of watch list is somebody's asking that can you add back this section of watch list and notify us when the stock becomes non-compliant or changes its compliance. That feature is already there. It still exists. Somebody's asking a question for IPO companies. 36 months average is not considered. Why? That means other stocks can also apply same. Otherwise, consider 24 months average with 24% debt, 12 months average for 20% debt, 16.67% average for 1/6 of debt for the current market cap. Please discuss with the Sharia board. My friend, all of these scenarios have been already discussed with the Sharia board. When we make a decision, we present all kinds of permutations and combinations and give the Sharia logic for that. The Sharia board then looks at the most appropriate and the process or the mode or the methodology which closely represents the sources of which closely represent or closely aligned with the objectives of Sharia, that gets picked up. So all of these things have already been taken care of. Now, with respect to your first question, in terms of IPOs, 36 months average cap is not applied. Obviously, it is not applied because you do not have a 36 months average. Whatever average is available on the day one, there is no average available, so it will always be current market cap. On day two, it will be average of 2 days. On day three, it will be average of 3 days till we reach 36 months. At that point in time, it will be 36 months average. So there's a practical availability of data, and hence that approach is not followed for IPOs. Very good question has come up. When a company decides to pay dividends for the first time since 3 years, will you still calculate the purification percentage according to last financial statements, or do you make an average of last 3 years? The company always pays a dividend for that financial year. They may choose not to pay a dividend for a particular financial year, and that year is closed. So let's say for the financial year 2020, no dividend has been paid, that year is closed. 2021, nothing has been paid, that year is closed. 2022, nothing has been paid, that year is closed. 2023, they pay a dividend. We will then assess what is the impure incomes of the year for 2023, and then incorporate what could have been the proportion of impure income in the dividend that you have received. So the financial years of every company are closed yearly. There is no carry forward which has been brought into in the next year. Yes, reserves will get carried forward, but in terms of purification computation, we will consider only that year's computation to be effective, in which year the dividends, or for which year the dividends have been paid. We do not average it. Somebody has put up a question. I mean, it's a comment. It's a very nice comment. He says in Hindi, in Urdu actually, हमारे यहाँ option से 1 करोड़ बनाते हैं एक day में. I mean, in English, I would say that somebody is making 10 million Indian rupees per day while trading in options. Whether you make 10 million or 100 million or $1 billion in option trading, all of it is non-compliant. So let's not talk about it. Somebody is asking me a question. Would you please highlight how the app screens financial companies, because they do interest and turn out halal in the app? If you have, that's very surprising. If there is a financial company which has been classified as compliant on the Islamicly app, please point it out to us immediately. I don't think we would have skipped this, but we are monitoring 50,000 companies on a daily basis. It's very highly unlikely, but we are always open to correcting ourselves. So a financial company which is interest based will be classified as Sharia non-compliant. But if you say that it has been erroneously classified as Sharia compliant on the app, please point it out to us by just clicking on the discussion forum under it, or mention that in the discussion, or put it up in the question, the Q&A section, and we'll have a look at that immediately. How about transacting in FNO segment? FNO segment is completely non-compliant. Can we fully depend on Islamicly and go for investment? I'm not sure what you mean by fully dependent. For ascertaining whether a stock is Sharia compliant, I would say yes. You can depend on Sharia compliant. You can depend on Islamicly and trust Islamicly to give you the most independent, the most thoroughly screened, and the most rigorously analyzed stocks in the experience of the Sharia board, and it's available on the app. Okay. There are some repeat questions. I will not be taking them. I should be wrapping this up in 5 minutes. Okay, somebody is asking, some interest haram income, just like hedging income, may be included in the interest income at the PNL. In the PNL. So what do you do to detect this non-permissible income from your calculation, especially that there are thousands of companies and that information is not automatically available, but is needed to be investigated deeply? So essentially, somebody is asking me a question that non-permissible income like hedging income could be included in the interest income. If it is classified as interest income, it will be considered as non-permissible income and it will be taken out. But if it is not classified as interest income and it is hedging income, and hedging income is on currency or any other risk management of the company, this is generally considered permissible from a Sharia perspective as of now. Independently, if you do that as a business, that will be considered non-permissible. But if a company is doing it, they usually, and the regulations and the regulators also say that companies can undertake speculative activities for risk mitigation. Since companies are doing this as a risk mitigation activity and they are regulated in doing that, these line items in the P&L of the companies are not considered non-permissible unless and until they are interest rate swaps or they are clearly in the red. They are not considered non-permissible. So hedging income, this is generally you're talking about hedging income, is generally not considered non-permissible because the company is doing it as a risk management policy and not doing it as a business activity to profit out of it. What's the view of Islamicly on investments in mutual funds? Investments in mutual funds are permissible, but that mutual fund should be Sharia compliant. Which mutual fund gives you a good return? You'll have to ask your investment advisor about that. Again, somebody is asking me a question about what about investments in gold ETFs? That gold ETF again needs to have a Sharia certification, or somebody needs to look at the process of how they are managing it. And if they satisfy all the conditions of Sharia, a gold ETF can be classified as Sharia compliant. But a ETF which is a gold ETF which is not certified as Sharia compliant, it can get tricky. Is upcoming IPO screening part of the app? Yes. Whenever an IPO comes, you get a notification that this IPO is Sharia compliant or not. Purification needs to be done on capital gains as well. Purification is not required on capital gains. So it is only on dividends. And hence we call purification as dividend purification. In only one scenario, capital gain has to be purified. That is, if a stock has turned non-compliant and you have continued to hold that stock beyond the 90-day grace period, and hence you are now holding a stock which is non-compliant and the grace period has also expired. So any capital gain that you make after the expiry of the 90-day period also has to be purified. Here the purification means you have to donate everything of all of the gains that you get from the 91st day on that stock. Simple as that. You don't need to apply dividend purification and then purify a certain element of it. Let's say the stock was at 100 rupees. Let's say $100 when you bought it. Now the stock has turned non-compliant and the stock price is 120 when it turned non-compliant, but you still continue to hold it and the current price in the non-compliant stage is 150. So 150 minus 120, the $30 need to be completely donated to charity. In this non-compliant period, if you received any dividends from that company, then you will have to apply the purification on the dividend as well. For IPOs, core activities of the company should be Sharia permissible. Yes, that is true, but we also have to look at these ratios. So we will compute the current market price by taking the share issue price divided, multiply by the number of outstanding shares that the company intends to launch. That will give us the market price. So financial ratios are also applicable on IPOs. Mr. Abdul Wahab is saying that interest income and non-permissible income is not considered in many companies. I'm not sure which companies these are. Please point it out to us and we'll have a review of it. Yes, we've reached the end of the questions now. I just go back to the chat section and see if there is any new question. Okay, there's one last question which I'm going to answer. Which has just come up. There's a question from a person called Wahid or Wahid, his name is. I'm new to Islamicly. I want to know that riba is more dangerous sin compared to other sins, war against the person who is involved in riba. So how can we understand that in your way of understanding of riba? Absolutely, riba in every sense, in every form, in every situation is considered non-permissible. And hence, as you can see, the changes in the Sharia criteria is also reflecting that all kinds of non-permissible incomes are considered to be part of the 5% tolerance threshold, and that interest or that impure income is purified with the dividend purification process. If you're new to the Islamicly app, I would suggest that you go through the YouTube webinars that we have there. Please go through the Sharia screening masterclass available over there and look at the blogs available. We'll get a fair understanding as to how interest income is treated. Interest income is definitely not tolerated. Yes, up to 5% is tolerated in terms of ascertaining whether investment in that company is permissible. But using the dividend purification mechanism, the exposure of that company to any interest income or non-permissible income is removed using the dividend purification process. That brings us to the end of this webinar. I hope you had the information that you're looking out for. Please ensure that you link your broker account with the Islamicly app to have a seamless journey of investments and monitoring. There is nothing that you will have to do or come back to the app for. You just have to link your trading account with the Islamicly account that you have, and then ensure that you execute your trades on the Islamicly app. There is absolutely no additional cost. There is absolutely no need to worry no reason why you should not trade using the Islamicly app. If you trade through the Islamicly app and you've linked your account with your broker, all your compliances, all your purifications, all your cutoff dates, everything is monitored automatically, and you have a seamless one-stop assessment of what your portfolio looks like in terms of Sharia and its compliance. So I strongly urge everyone, whoever has not linked your accounts, to link it to the Islamicly account, and hence you'll have a seamless trading experience. Now, in addition to that, if you just want to use it as a screening app, you can still use it as a screening app. Screening is still available as it was earlier as well. I believe more and more new features are in the works. More and new products are also in the works. There is a huge amount of new features which are coming up in the next few months, and we are looking at a very, very exciting 2024, where we have massive plans to bring in more conveniences to the Islamic investor and more products as well to the Islamic investor. I hope you had a good time and you had a good exchange of knowledge in this session. Look forward to more and more people joining the Islamicly app and utilizing our services. And please feel free to ask us any questions, either on the YouTube channel that we have. You can put up a comment over there. The best way to communicate with us is through our WhatsApp channel on the customer support segment of the app, or you can write to us in the forum section of the app and click on the discussions. You can post a question and we will be able to answer that question from a Sharia perspective. Thank you for your time. Jazakallah khair. May all of you be in good health, and let's pray for all our brothers and sisters and the babies and the families in Palestine. And let's hope that the Ummah wakes up to the financial power that we can bring by platforms like Islamicly. And that is essentially the intention of launching Islamicly as an app, to empower you to become part of the mainstream financial world, so that we as Muslims can also be taken cognizance of, and nobody ever dares to point fingers at us. Yes, it is a strong statement, so let's pray that Allah's help comes soon to all our brothers and sisters and our family members in Palestine. If you have any questions regarding this webinar, please feel free to reach out to us using the app. Take care. Ma'asalam. Assalamu alaikum wa rahmatullahi wa barakatuh.